After 24 years as publisher of Puget Sound Business Journal, Mike Flynn has moved into what he describes his entrepreneurial encore. I love that. Happily for us, this includes Seattle 4 Rotary. Mike writes a weekly column. This is where you start making your way up to the podium. Mike writes a weekly column called Flynn's Harp, which you need to check out. Mike, take it away. And you've got a mic.
We can talk.
Yeah.
Before we begin, I'd like to make sure that Scott Jarvis, who is Rick's boss, and I like to call him a friend of mine, has been the head of the Department of Financial Institutions with the second governor. He started in 2005 with Chris Gregoire. You should just stand up, Scott. He's done a superb job. So I'm pleased to have the opportunity to be part of this conversation today, and I refer to it as a conversation instead of an interview, which is what it is, with two of the area's most respected bank executives. While both are women at the top of the banking world here, they get to the top because of their substantial skills, and I've been fortunate enough to know them both for a long time. Melanie Dressel, President and CEO of Tacoma-based Columbia Bank since 2000, has been with the bank since it was launched, actually, in 1993 as a community bank. She's not only grown with the bank, but has largely been responsible for its growth from a small bank into one of the with a three-state footprint and almost $9 billion in assets. She is simply one of the real success stories in Northwest business. Carol Nelson has gone from a small bank to a large bank with a stop in state government in between. Carol is also responsible for 3 Northwest states as Seattle market president for Key Bank, a major national bank based in Cleveland. Get my sheets here. Carol, for a decade, guided Everett-based Cascade Bank, overseeing its successful transition from a savings bank to a community bank. And before returning to banking a year ago, she was director of the State Department of Revenue and a member of the governor's cabinet. I'd like to quickly address the issue that there may be some sensitivity that this is a women's banking panel, that we shouldn't be focusing on women as bankers rather than just bankers as bankers. I think both Len and I had the conviction that these two had to be better than good to rise to the top, as with Phyllis Campbell at JP Morgan, and a panel that acknowledges the unique perspective they bring is important. But I also want to share it with you before we start. About 3 years ago, I did a panel elsewhere with 3 Irish bankers, all of whom had been members here, Pat Patrick, Pat Fahey, and Pat Deneen. And the only person who complained about that was a Scotsman who said, "Why did you have to have an Irish bankers panel?" So to get underway, could each of you take just a couple of minutes, even though I know you could spend the entire afternoon on this, and offer a look at your industry as uncertainty takes hold about the economy, interest rates, availability of money, and the political scene's implications. And why don't you start, Melanie?
Okay. Well, as you all know, we're in the most trade-dependent state in the whole country. And of course, we benefit a lot from those big planes that get exported from Washington via Boeing. But nevertheless, we really do pay attention to what's going on in the economy, and it does concern me. I talk a lot about the Pacific Northwest and how proud I am to be from the Pacific Northwest and lead a company in the Pacific Northwest, but we clearly are in one of the best places to operate a business right now in the United States. But the biggest challenge that I see is what will the impact be from the economic conditions, the political unrest, and just the turmoil that many other parts of the country face. Right now, things are going really, really well, and I just hope that they stay that way.
Carol?
Well, I would just say, as a virtually lifelong resident of this state and this region, you know, I look at what's happening in our economy today, and we're pretty fortunate to live in this part of the country. From our bank's perspective, we view the Pacific Northwest as really a growth opportunity, particularly compared to other parts of the country, so we're excited to be part of that. But I also say, from another point of view, I serve on the board of the Seattle branch of the Federal Reserve Bank, and we are constantly being updated by our very smart economists about what is going on in the country, and we're cautious as well in terms of what we see around GDP growth, in terms of what we see around inflation. So while things are going great, we are also very cautious.
The next question is, what's the impact of the Dodd-Frank Act? What has it had on banking? And I'm not going to ask you to address the fact that a couple hundred-page bill became thousands of pages of regulation, which makes everybody shake their head, but rather its impact on how each of your banks now does business and on the industry in general, and if you could say in general, has it been good or bad? Carol, your turn.
Well, Rick and I talked a little bit about this yesterday preparing for today, and you could really get him wound up on this issue. We're really lucky in our state to have regulators like Rick and Scott who are men of reason and really understand what's been going on in our industry. But as you take a look at Dodd-Frank, I mean, it is the most substantial regulatory reform that our country has had in the financial area since the Great Depression. It was massive. It's now a little over 5 years old. And the burden of that regulation on banks has been incredible. And not just on banks, but other types of financial institutions as well. So intense regulatory burden for all banks. And it's caused us to have to do business a little bit differently with the liquidity requirements that we have, with the capital requirements that we have. And it certainly has slowed down growth, again, in the interest of making sure that our American economy is more safe. So, is it good? Is it bad? I guess I'll let you be the judge of that, but I would just say there are, as Rick pointed out, much fewer banks in the country today, and there is a crushing amount of burden on those remaining banks.
There are parts of the Dodd-Frank bill that I think actually were necessary. And when you really look at it, there were two things that the Dodd-Frank bill was intended to help. One was that it was to stop the basic derivative securitization, that whole, very, very much Wall Street oriented chaos. And the second part, and this is the part that really impacts us as a community bank and many others, is that it was supposed to provide consumer help so that banks could not harm consumers. And that piece of the bill, I really feel, unfortunately, is causing lending, in particular to small businesses, to be curtailed. And it's just really interesting to me that when you look at all the regulations that banks have had for decades, the vast majority of them were really around how to protect the consumer. We have lots of those, but now there seems to be so much regulation, particularly as it relates to very small businesses, that the direction, if you kind of follow the dots, would lead you to believe that the regulators, and I'm not talking about our state regulators, because as Carol said, we have tremendous support in this state and know that we have a champion, in particular for community banks. I'll speak on our behalf, Rick and Scott, it's great to have you. But wanting to have such a homogeneous approach to small business lending, that what really is intended, I think, is that everything goes through some kind of a model. And it's great if you fit into the model, but if you drop out of that model, that's where I think we're seeing the real disservice to our small businesses. Now, that doesn't mean that you can't work with the customer to try to come up with a solution. That's what we as community bankers do. But I've said it probably 1,000 times that it breaks my community bank at heart to really have the bumpers situated in such a way that we're really discouraged from really being a resource for our small business lenders. Now, that doesn't mean that we're not growing loans. We grew loans by over $1 billion last year, safe and soundly. And it's because of the part of the world that we're in. There's a lot of loan demand, and we feel fortunate to be in a position because of our capital structure to make a lot of loans in the Pacific Northwest.
Do you, I don't know, I suppose you this, do you think that the comments you're making about Dodd-Frank would suggest that it's going to be more difficult or less difficult in the future for small businesses to get lending if the regulations don't ease? And do you think they'll ease? As regulators say, well, whatever. Do you think it's going to get easier or tougher or about the same continuing?
I think it's going to be about the same. It's going to take a lot of intestinal fortitude for a lot of our politicians to, really say it's okay if you say that banks are overregulated in this arena. Right now, I think that banks just have this reputation, not because of the banks that most all of you know, but banks get lumped into one big puddle, and it's really going to take, I think, some time before we can sort through that again.
Well, and I think that we also need to look at, what sort of other alternatives do we have? For example, in our situation, we look at SBA lending. Key was the #4 bank in SBA lending in the state of Washington this past year. How do we use tools like that to help support lending back to small businesses in our community? We'll look at that. But I think also what you'll see is, there are other alternative sources of financing out there that spring up when banks are not able to lend. So whether that's some sort of a, crowd sourcing funding, or whether it's, some other alternative form of lending that will occur out there that you guys will have to figure out how to regulate too. But those are some of the things that I think we'll see start to spring up.
Melanie, you made the point that part of Dodd-Frank's focus was ending some of the Wall Street oriented things. Has that really happened?
Well, from what I read, and I'm not an expert on it for sure, it really has not closed the door on a lot of the issues that caused the true meltdown in our industry.
I would agree.
What's future community banks? I think most people who are from smaller towns know the local bank was a key to business development and lending. Not that you guys don't do a good job there, but the bank in Newport is always the best bank in Newport, probably. Do you think there are going to be a lot fewer community banks formed? There don't seem to be many forming around the country. And does it make a difference?
Well, I think community banks serve a very important purpose in our economy. And I think that the challenges for larger banks like Key is to really be a community bank in spite of the fact that we're large. And so, for example, as you take a look at the communities that we serve across the state, the involvement that our bankers have in the local, whether it's a Rotary or a chamber or a nonprofit organization, to really be local and to be part of that community. These are folks that were, born and raised in those communities anyway. So I think really making sure that you are still acting in a local and small way is incredibly important. Going forward in terms of new bank formation, I don't think we're seeing a lot of that right now. I think a lot of it has to do with the economy, the regulatory burden that we talked about, the ability for banks to get up and started and actually become profitable because of all the costs of regulation and technology. These are all things that are pretty difficult for banks. You cannot attract the capital if you're not going to have the return. So I think we'll see much smaller, slower growth in new bank formation.
I think the interest rate environment's going to depress the number of new banks in formation, as well as just passing the regulatory hurdles that you now have and the capital hurdles to start new banks. So I do think that there will probably be fewer community banks, only because the ones that are merging, at this point in time, we're pretty much through seeing banks fail, as Rick said, but as banks merge, and I think that you'll see more of that because of the cost of regulation and technology, there just aren't those new banks that are coming up to replace them. But, I'm a community banker at heart, and I don't see the size of the banks as dictating the community bank. I mean, the community bank is so important in all of the communities that we serve. And, you know, we still view ourselves as being a community bank, even, you know, at close to $9 billion and 150 branches. We just happen to be 150 community banks.
Now I'd like to raise an issue that two of you, and this may explain two women bankers, may be more adept at handling than your male counterparts. A major international study involving more than 100 corporate boards, and some of you may be aware of this and some not, but it's worth studying, done in part by somebody from the University of Washington. It was called the Better Boards Project, and they met with board members, male and female, at 100 boards around the world, and concluded that the financial crisis of 2008 might not have been as severe or might not even have happened had there been more women on corporate boards. And there was an explanation for that. In fact, I want to read you a couple things, and then I want your comments about it. That female directors are more likely to fully explore the implications of decisions through their implementation stage and insist on discussing standards of ethics and accountability rather than being part of the old boys club. And more than 20 countries have now adopted quotas for women on corporate boards in order to continue to function as banks. So tell me a little bit about your thoughts about that. And have you seen that report?
I have, and as I take a look at, I think diversity on corporate boards is incredibly important. And what we see are statistics that show the value of diversity in terms of increased performance, return on investment, return on earnings for these companies that have these diverse boards. And at Key, we're pretty proud of the fact that we have 5 women on our board, as well as other individuals of color that really add to that diversity. We also have a CEO who is a female CEO, one of the only female CEOs in the top 20 banks in the country. So we really believe in that. You know, our experience has been that when you have one woman at the board table, it really is a bit of a token. When you start to have 2, you can begin the dialogue, but really you need 3 or more women at the table to really bring about the richness of that conversation the diversity brings. So I am personally a big supporter of diversity in the boardroom. And when I ran my company as the CEO of Cascade Bank, we had 3 women on the board. And it's just something I think is really, really important to enhance value for our shareholders.
I would agree with that diversity, no matter how you define that, is really, really important because it just brings different viewpoints to the board table. I think, too, my concern about having a quota is that it may actually diminish the women who were chosen because they were the best possible candidate for that job, and I would just love to see our country be the first country that does it just because it's the right thing to get the right women or people of color around the table. And we have 4 of our board members who are women, and I like to think that that our performance has been improved as a result of that.
Cool. Before I go to questions from my audience, I want to ask if there's anything you wished I'd ask you. Carol?
This is a setup because I did ask him to ask me this question.
Ask that question.
Thank you. I just wanted to let you know that as a community banker, I've also been very involved in different organizations, and this year I have the honor of chairing the American Heart Association's Go Red for Women, and Friday is a National Day of Wearing Red, so I encourage you to join me in doing that. But I wanted to just let you know how important this is as Heart Month. And the need to raise awareness and education so that we can do additional research to help address the issue of heart disease, which is the #1 killer in this country.
Melanie?
Can't top that one, but we are joining you on Fridays, so.
Okay. So we're going to turn to Q&A and microphones.
Carol, I'm on board with the heart thing. Yeah,
We have a question here from Burr.
I was just wondering, given what happened in Japan over 15 years of deflation, what do you think is keeping our country from following in their footsteps in terms of getting older and starting to see deflation happen?
And I have to say that my opinions are my own. They do not represent anything that might come from the Fed. But I would guess that as you take a look, I have to say I am a Fed fan. Now that may not go across well here in this community, but I do think that the approach that they have taken, again, individually, is very thoughtful and has been one of moving at a moderate pace. And I think that's so important because, we are very data dependent. We really need to see what is happening in the economy before taking steps. And so I think that's a terrific approach. So using that time to move in a moderate pace based upon the data is something that's incredibly important.
You want to add, Melanie?
I don't think that there's going to be any one thing that helps us to, really start seeing the impetus of the economy. When you travel across the country, as I'm sure many of you do, there are different pockets in the country that are still suffering a lot from the recession, but now they're suffering because of the energy crisis. And I think that it's going to be steady but slow. I just hope that we don't start charging all of you to put your money on deposit with us, as Japan started doing last week.
Thanks for joining us today. I'm just curious, keeping on the local track, how do credit unions factor into the marketplace with you? What do they do that's different? How are they similar? And how do they fit in?
How many credit union folks are in the room? Both. Actually, credit unions are becoming more competition at the higher end of the lending arena. And, that is a deviation from what credit unions were intended to do. I think credit unions definitely serve a purpose, the member-based, but credit unions really were started to serve the underserved. And I'm just not certain if that applies as much today as maybe it did when credit unions were formed. They're great competitors. I've got a lot of friends who are in the credit union world, so I certainly don't want you to think that I'm being disparaging towards them.
Well, and not only do I have a lot of friends that are in the industry, my husband works for a credit union. But I would say that, as Melanie mentioned, they were started originally to really support folks of modest means and to really provide a bank-like service to those communities. It's changed and evolved a lot over the years. I think it does create an uneven playing field. I think as credit unions continue to evolve and to be more competitive in the space that Melanie mentioned that we compete against them in, I think that somehow we are going to need to level that playing field a little bit better.
A question from KC.
I've got a two-part question, if I may. One is, do you think the diminished options in terms of choices of banking as a result of increased regulation? And the second part is, if we have fewer banking options, does that protect the consumer?
Well, what I would say is the numbers that Rick spoke to, I think in part are due to the economy in terms of the reduced number of banks, but I think it also has to do with the increasing burden of that regulatory compliance. So I really do think that it has had an impact on our industry. In terms of, the second part of the question was around safety? No. What would you say to that, Melanie?
I really don't think so. There are still a lot of choices. I mean, we have 52 state-owned or state chartered banks in Washington State, plus all of the larger banks. So I still think that there's quite a bit of choice.
A point of clarification, wasn't there 2,000 pages in the Dodd-Frank bill, followed by 16,000 pages of regulation? And following on that would be, has there ever been an example of regulations being decreased or diminished in the country having to do with banking?
No. Yeah, no, you're right. It was 2,000, and we're not even halfway through with the rule writing.
Are you trying to get rid of jobs?
Thank you.
Appreciate that.
I hope you've seen this movie, The Big Short. I just want to know, how accurate was it?
I read the book. I haven't seen the movie. I hope that the movie is a little bit more. I nodded off a few times in the book, although the subject was really interesting. From what I understand, it isn't far from the mark. There have been several books written about it, and they seem to be pretty consistent, which is really frightening. And to that point, I mean, there needs to be more regulation around that kind of activity.
Perfect. Unless Rick has a question. It's good. Thank you. I used to pester my big sister incessantly until the day she kicked me really hard in the shin. As needed, she is quick to remind me of that day. Pushing boundaries remains my instinct. Enlightened mentors and consequences are my teachers. They groom me to reframe, to see things differently. We live in a time and a place where diverse partnerships and ongoing learning are imperative. Whether we know it or not, whether we choose it or not, we are one another's teachers. The more mindful we are of this, the better classroom we become. See you next week.